Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Tuesday, June 28th, 2016, and we are looking at the Dow Jones Industrial Average after having a tremendous sell-off for the last couple of days with a most impressive recovery, closing up about 269 points at 17,409. Puts it up about 1.5%. Take a look at the S&P, up over 2%, 2.14% at 2027, clearly above the 200-day moving average. Very, very impressive move nonetheless. 1982 on the low, 2028 on the high. So as you can see, this was a rally that we saw close right on the highs of the day. So traders, over the last couple of days, we have been looking at logical points in which we could determine if in fact this market had found some sort of support. Although yesterday, I have to admit, I was getting extremely bearish on the market, and that usually to me is that signal, that contrarian signal that's telling me we're pretty much at the bottom, because at that point, I think the sky is falling in. But in terms of hard technical facts, we did look at the fact that it traded under but closed at the 38% retracement. I did make mention of that, but we also made mention of the fact that it definitely closed under the 200-day moving average. Well, lo and behold, whether we want to call it a relief rally or the fact that traders believe that the scenario over in Britain and Brexit, so to speak, will resolve itself over time in a way that is being construed as less chaotic than originally perceived, we see this market getting bid up. My sense is the jury is still out. We don't know how this Brexit is going to affect global trade, Europe, and many, many things. And my hope is that it is resolved in the best way possible. That's all of our hope, obviously. But when we take a look at this market, absolutely no doubt, we saw some real support come into the market. The support itself is coming in numbers that make sense. In other words, the fact that 38% was our retracement, the fact that we are now trading over the 200-day moving average, that speaks highly for the potential for this market to have somewhat of an extended rally. That's something we'll have to look at in the next day at least, but in the days to come, next couple of days. And that leads us to the Standard & Poor's. Now, with the Standard & Poor's, we do have a similar scenario, although the actual correction was deeper. If we consider that came to about the 50% retracement, which is 1976, the market definitely traded below the 38% retracement, that's 2001, also traded well below the 200-day moving average, which is 2015 right now. But look at this dynamic move. Hits this 50% area and just genuinely bounces off, closes above the 38% retracement and the 200-day moving average all in one swoop. That, traders, is absolutely impressive. And as I talked about, really right when Brexit had taken place, and that is we're probably going to get a really good opportunity to buy this market rather than look to sell it. Yesterday, I was a little bit hesitant at that point because the effects of this market moving down will wear on all of us, but we hit certain numbers, and those numbers cannot be avoided in terms of how we're going to look at this market. And so, as I said, we could see some genuine opportunities in the next couple of days. And most importantly, when we look at some of these markets, this is a day in which we're seeing counter trends to the overall trend of the dollar, extremely bullish, but today it closes off by about 0.5%. You can see that right here at 96.02. When we look at what it's done for the week, though, you can see that on the week, we're still trading higher on the week. And traders, take a look at the British pound. British pound up about 1% today. 1% is a small move considering the kind of drop that we had, and that is to be expected when you've had this kind of carnage in the market. So whether it is short covering or buying the dip, so to speak, we're certainly seeing some upside action in this market today, which we haven't seen in quite a few days. And so traders, lastly, do want to look at crude oil. We really are seeing a day of reversals. In other words, where the trend has been over the last 2 days. I draw your attention to the chart on the screen. We've got crude oil on the top. We have the Standard & Poor's vis-a-vis the E-mini on the bottom. We talked about the fact about a week and a half ago that we saw this positive correlation once again evolve in the market. When oil went down, equities went down. When equities or oil went up, equities went up. You saw this tremendous spike down in the stock market. You also had crude oil come down for the last 2 days, equities down for the last 2 days. Now, the recovery is nowhere near the kind of strength we saw in the Standard & Poor's. That's a dynamic move, to say the least, but nonetheless, it is worth noting. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.